Bitcoin, the first and most famous cryptocurrency, appeared in 2009 and was the result of the work of a man hiding under the pseudonym Satoshi Nakamoto. Nakamoto's true identity is still a mystery. He published a document called Bitcoin, a peer-to-peer electronic cash system, which described the concept of a new form of electronic currency based on the principles of decentralization and the absence of central control. In this document, Satoshi Nakamoto presented the idea of creating a system in which users could make direct payments to each other without the intermediary of traditional financial institutions. He sought to develop a decentralized payment network that would be resistant to censorship and able to ensure user anonymity. Satoshi Nakamoto actively worked on the development of Bitcoin and interacted with the community of developers. He shared his ideas, answered questions, and made changes to the Bitcoin protocol. Over time, however, he began to withdraw from the public sphere, and in 2010, he ceased his active work on the project. His disappearance has left many unanswered questions and has become one of the mysteries of the crypto world. Despite Satoshi Nakamoto's disappearance, his legacy lives on in the form of Bitcoin and blockchain technology. Bitcoin was the first successful realization of the cryptocurrency concept and became the basis for the development of many other digital currencies. The blockchain technology that underpins Bitcoin has generated enormous interest in the global community and opened up new horizons in the field of financial technology. The first transaction using Bitcoin was made on January 9, 2009. In that experiment, Satoshi Nakamoto sent 10 Bitcoins to Hal Finney to demonstrate the functionality of the new system. This transaction was the starting point for the development of Bitcoin and represents the beginning of the digital revolution in finance. The transaction was of great significance because it was the first practical example of Bitcoin's use in the real world. It confirmed the ability to transfer digital assets directly between network members without the need for a central intermediary. At the beginning of its existence in 2009, the price of Bitcoin was negligible. However, as early as 2010, Bitcoin began to attract more attention and its price began to rise. However, the first significant rise in the price of Bitcoin occurred in 2011, when the price reached $1 per Bitcoin. This was an important moment in the cryptocurrency's history, as it demonstrated its ability to provide possible financial rewards to those who invested in it early on. But the most impressive rise in the Bitcoin price occurred in 2017. At the beginning of the year, the price began to skyrocket, and by December 2017, it reached a record $19,000 per Bitcoin. This rise sparked widespread interest and drew the attention of the media and investors from around the world. Bitcoin became a major topic of discussion in financial circles, and many began to consider it a promising investment asset. The next significant rise in the price of Bitcoin occurred in 2020. At the end of the year, the price reached the $28,000 per Bitcoin mark. This was another major moment highlighting the growing popularity and acceptance of Bitcoin as a digital asset. However, the real explosive growth in Bitcoin's price occurred in 2021. Within a year, the price rushed upward and reached its all-time high of $67,000 per Bitcoin. This was a phenomenal success that brought even more attention to the cryptocurrency and sparked a debate about its future. As of June 1, 2023, Bitcoin's price is around $27,000. Although it is lower than the peak reached in 2021, Bitcoin is still a significant digital asset with great potential value. It is important to note that Bitcoin's price is subject to significant fluctuations and volatility. It depends on various factors such as supply and demand, regulatory measures, institutional investments, and the overall cryptocurrency ecosystem. Therefore, investing in Bitcoin and other cryptocurrencies always involves a certain level of risk and requires prudence and caution. Now let's move on to another fascinating topic, mining. When Bitcoin was introduced in 2009, Satoshi Nakamoto proposed a mechanism that allowed people to receive Bitcoins as rewards for participating in the network. This mechanism was called mining. Initially, Bitcoin mining could be run on an ordinary computer using a central processing unit, CPU. By simply running special software, anyone could take part in the process of creating new blocks and be rewarded in the form of Bitcoins. After a while, however, it became clear that effective mining required more powerful computing resources. In 2010, graphics processing unit, GPU, mining was introduced, which proved to be much more efficient compared to CPUs. GPUs have more processing power and allowed mining tasks to be performed much faster. Then in 2013, ASIC, Application-Specific Integrated Circuit, miners appeared, specially designed devices designed exclusively for Bitcoin mining. ASIC miners provided significantly faster computational speed and power efficiency, becoming the standard tool for Bitcoin mining. They far surpassed the performance of conventional computers and GPUs. As Bitcoin became more popular and the number of miners increased, the complexity of the mining tasks also increased. The system automatically adjusts task complexity in order to maintain a constant time of creating a new block on the network. This means that each year, mining requires more and more computing resources and energy to produce the same amount of Bitcoins. Unfortunately, however, there is now a situation where mining Bitcoin has become unprofitable for most individual miners. For the most part, successful miners are large companies or pools of miners who have huge computing power and access to cheap electricity. For the average user, Bitcoin mining can be inefficient in terms of equipment and energy costs. A more efficient way to make money from cryptocurrency is trading. Trading involves buying and selling cryptocurrencies on exchanges in order to profit from changes in their exchange rate. However, trading also requires knowledge, skills, and experience to make informed decisions and minimize risks. As a result, Bitcoin mining remains an interesting process, but for most people, it is not a profitable way to make money from cryptocurrency. Trading is a more affordable alternative, but requires proper training and understanding of the market. Everyone should carefully assess their opportunities and risks before deciding to get involved in the world of cryptocurrency. To start trading on the exchange, you need knowledge of technical analysis, risk management, and startup capital. Someday we will make a video on this topic. That's the end of our video. I would like to note that Bitcoin remains the most expensive and the most popular cryptocurrency today. In conclusion, I want to advise you to start understanding cryptocurrency. We're not urging you to invest your money in cryptocurrency, but just start to understand. Keep watching our videos, start reading books on technical analysis. Best of luck to you.